Hello, everybody.
Well,
Thank you again for joining us for Red Wine and Regulations with the Grosse Pointe Board of Realtors. We are joined by an extremely accomplished panel this month. Some of us are, given how busy the industry is and everything going on with life, some of us are in our offices, some of us are at home, some of us are outside, some of us are on the road. So what we're going to do is we're going to start off with Jaymie Paternoster with House Call Home Inspectors. We're going to let her go first. And Jaymie, how are you?
Awesome. Hey, everyone. I'm glad that you could make it on the call. Things are over here. Business is great. Everyone's healthy. We're good. Our team is growing. So it's fantastic. So when we get called, one of the things is home inspection, we have to be safe. We have to practice social distancing at our home inspections. We always encourage our clients to attend. We always have to be clean when we're at the house. We have to wear a mask. We follow all the rules. But our home inspection.
Jaymie, I'm gonna interrupt. I'm actually getting a message that says your bandwidth is extremely low, and as a consequence, we're not hearing very easily, or at least I'm not, what you're saying. So I don't know if you're going to get to a place where your bandwidth is better or what, but I just thought I would mention it.
Yep. So at this point, I'll jump in and we're going to kick over to Kim Romero with First American Home Warranty. She'll give us a little update on the industry and everything that COVID and just the massive volume that we're seeing in the industry is done for and to the home warranty sector.
Hey, well, thank you, Chris. Hey, guys, nice joining you all. Yeah, the home warranty, we are slammed. Everybody's running everything hard right now, and AC claims are off the chain. We're actually having record months of our claims, and it's kind of interesting. In Michigan, I'm exceptionally high compared nationwide, and nationwide comparatively, we don't have as many warranties in Michigan, so it's just everybody's using their warranty right now, which is a good thing. We're here for them. But one thing I want to mention that's really important, and I know you guys in the industry are experiencing this or noticing or will, parts are on delay right now because they're not building them when things were shut down, so they got on back orders, or they're not being imported. So they're there, but they're a little slower, delays on those types of things. Even people going out retail that don't have home warranty are going even into the retail and have to wait several weeks for a refrigerator, for example, things like that. So we're noticing that big time. People are appreciating the warranty though, because we're there, we're advocates for them. And we can go, we can streamline it a little bit better only because we have that buying power and those relationships in place. So it actually is helping, but it's definitely something nationwide and probably in other countries, I would say as well, but definitely the United States is feeling that.
Good. So I believe it's R22, correct?
Yes.
The refrigerant. Have we seen the price increase in that we were expecting, given that the supply has gone down?
And you certainly will. Yes, it's definitely going up. Supply is in demand right now. For those of you that may not be aware, but R22 is Freon, Puron, whatever you'd like to call it. It's the slang in the industry, Freon. But R22 is the refrigerant that goes down the lines for AC unit. Probably anything older than 2012 probably requires R22. And that was a ban in the United States to import or to produce it in the United States in 2020. So now it's a commodity, it's very expensive and going up, and supply and demand will be getting less. So it's very expensive. We're finding some people, it could be, if they didn't have that coverage, going retail, they could spend a couple thousand filling up just for Freon. So it's over $100. Maybe it might even be more. I didn't price it out today, but it's at 121 a pound, something like that last time I looked. But yeah, people are loving the Freon. Even to top it off is expensive. So yeah, it's definitely something to think about. And how home warranty, again, can help protect, at least certain companies cover, some don't, some do.
So it certainly is no longer free on.
No, well, it actually, well, we cover it. The company I work for specifically, we cover all costs of refrigerant, but other companies are stepping back from that scene, or they don't cover much of it, but we actually cover all the costs. So it's a pretty major point. Yeah, so inspectors, or I know Jaymie, she can't speak up right now because her bandwidth maybe, but I know she's finding it out, or other inspectors are finding that along the way and are counseling the homeowners right now on that fact that that is something they'll be dealing with. Sellers and buyers or homeowners are pretty naive of knowing what chemical that goes down their line. So there are some alternatives out there, not necessarily suited for every situation. So it's kind of a dicey space, or expensive, I guess. It's an expensive situation. So if something needs to be replaced and that Freon's not available, or they can't put down that specific one, or use an alternative that involves the whole unit, and then also the furnace inside, everything needs to be talking. If they got to replace out the outside unit with the AC, it's got to be compatible with the inside furnace. So it's pretty complicated, but you get very well aware of these things when you're in it. When you're the homeowner, you start realizing, wow, gosh, darn it, I didn't realize all that. So it's an expensive deal to replace either one right now, especially when you got to do them together. So,
And Jaymie, we'll circle back to you since, and we'll hope that we've got bandwidth right now. Is this something that you are able to advise on, that you're checking when you're doing the home inspection? And are you able to check those levels and or advise, hey, this is something that you need to be aware of in the next year or two, or can you even project out that long?
You actually just said it all, Chris. Thanks, Kim. That was a good lead in. Sorry, y'all. Apparently, Verizon doesn't like Indiana as much as they like Michigan. But so yeah, as a home inspector, that's a great question for anyone that you're going to hire or that your clients hire. So it is our job to see how the air conditioner is currently functioning. Same thing with all major appliances in the house. We have to see how they are currently functioning. Some of the technical parts that get tested, like what the Freon levels are, we don't have that. We don't have those tools. We can tell a homeowner how much it's cooling. We take the temperature of the air going into the unit, room temperature, and then we take the temperature of the air coming directly out of the unit. And as long as that is 16 plus degrees difference, we are good to go. We are good to move forward. But you know what? It's really rare for heating and air conditioning professionals to put just a sticker on the side of the unit that says, Joe was here in January to service the furnace, or, they were here, I don't care if it was 2017 to service the air conditioner. Nobody puts that on the unit. So we always tell our clients and our agents, at least in the inspection response, ask the question, when was the last time it got serviced? Because if you're going to go forward and get a home warranty, is that right, Kim, your home warranty?
yes. You broke up a little bit, but I think
that's going to be one of the questions they ask. Yeah, when this air conditioner, if this air conditioner stops working 11 months from now, it's going to be one of the questions. Was it working really well when you purchased it? So yeah, that's a good question. And then also you were talking about Freon, how the Freon has changed over the years. It's also our job to figure out the year of the unit, both inside and outside, because there's compressors and condensers. We have units, have parts that work together, and the outside unit isn't always the same age as the inside unit. And that's a good question for a home inspector at the house as well, is, hey, what age are these? Are they the same age, or how far apart are they? Like, what if the AC was newer right at the end of this new Freon exchange, but the inside unit is super old? If you're going to have to replace that anytime soon, sorry, but they're probably going to have to replace both. So So those are all good questions for your home inspector. Yeah.
That's, and with SEER 14 and 13 and all the SEER, which are mandates across the country, come into play with that as well.
Yep.
You have to bring it up to code.
Yep. That's great, Kim. Yeah. Awesome.
Well, we have bandwidth. Is there anything as far as volume that you guys in the home inspection sector of the industry are experiencing right now, or things that can help overall?
Volume-wise, you said?
Yes.
Yeah. So the beginning of August, it's funny. We actually just thought, geez, for our part of the transaction, we feel like the first week of the month is always a little slower. And I don't know, it took me 11 years to put that together, but I think the first part of the month for home inspection is a little slower. So we understand that right now clients are having a hard time getting a home inspection within that, 2 to 5 day window. And for a hot minute, like June and July, y'all were rocking, getting these houses churning out, which was awesome. So a lot of home inspectors were just like 5-7 days out. We heard on a call last month that one of the home inspection companies, they were just booked, So that's a question for everyone too. When you're going across scheduling, try not to get try not to lose quality home inspection just because they might not be available within a certain time frame. So I just say that, don't always just go with the first person that's available if you've never heard of them before. Do your checking, right? And then also those home inspection companies that may have been booked out a week or more, maybe circle back to them, because June and July were crazy. And like us, we were booked 5-6 days out. Well, now we're back to our 24 to 48 hours availability because our team grew. We hired a person over that season, and then our part-time guy went full-time. So there you go. So always circle back to that home inspection company that you maybe used before, and they were a little busier. Not only does volume change, but your team might change too. So I hope that helps. Yeah. Does anyone have any questions? I think
Jaymie,
that's a lot of what we took. Yes, sir.
Bob Taylor. How many times are you getting phone calls before a deal's put together just to even ask what your schedule is? Because that would have been, if I'm getting close to finalizing something, I would have already reached out to whomever my favorite home inspector was to at least attempt to get on their schedule.
Yeah, Bob, that's a great question. It's actually happening more often now than it did even just a few months ago. Right now, as much as we want, you have those agents that you hear from often, which is phenomenal. But it doesn't matter if it's someone that we hear from once every 6 months or if it's someone that we hear from once a week. You've got to have an accepted offer in order to get on the calendar. We want to give our clients the best service, and we want to have an open schedule for everybody. But when someone tries to get on the books before they've got an accepted offer, far too many times we've had a cancellation, and there is no waiting list. If that makes sense. So we try really hard to be tactful to say, y'all, we have got to have integrity for all of our clients, and unless you're in an accepted contract, it's just really hard to hold that spot for you because you canceled one too many times. But tactfully, respectfully, I hope that makes sense.
It does.
But and actually a lot, recently, we've had a couple of cancellations because the clients are really encouraged to shop around and find a home inspector that they feel comfortable with for whatever reason. And Uncle Joe always has this guy that he really recommends, which is awesome. But when agents, when you guys are talking with your clients about what about the process of home inspection, if you ever have questions about service, what they're actually paying for, what am I trying to think of? Value. Thank you. If you ever have questions about value, please let us know. because I would much rather do that home inspection for your client than them use their uncle's favorite person whom you've never heard of, realtor. So I would say do your hardest to just really talk to them about value from home inspection companies that you have maybe heard of in the past or worked with in the past, because after they move into their home and they got to call Kim for their home warranty because they knew nothing about their house, I just really exercise on the side of caution when it comes to that. I know that you can't tell them exactly who to use, but I would really like play on that value card, you know. I hope that makes sense.
Good, thank you. And we had a question in, I'm assuming you can't see it on the phone, but what is the service area that you cover?
That's a great question for all home inspection companies. But because you asked me specifically, we stay in like the Tri-County, actually 4-county, like St. Clair, Macomb, Oakland, Wayne. I mean, we try and stay within an hour of our hub. Like we rest our equipment in Clinton Township. Most of us live in St. Clair Shores, so we try and stay within an hour of that, really only to get to the next inspection in time. Because if we have to go from Livonia to Port Huron, we just want to make sure that we have integrity for everybody. We do 3 a day. We just need to make sure, you know, just like y'all, we'll go anywhere. But we want to make sure we get to the next one at a time. And well and septic, that's a good question, Kim. I saw that pop up. We have 2 companies that we refer well and septic to because they are only well and septic and water testing experts. And the majority of the time they show up at the time of our home inspection. Most of you know that we are only 3 years old here, and in some areas you have to be doing it for at least 3 years before you can even get that certification. So we just chose to go the route where we stick with what we know, and we refer people out to the companies that stick with what they know. Yeah, but that's a great question for all home inspectors because it's important to get all that stuff done right away.
Fantastic, thank you, and thank you, Kim. Next, we'll jump over to Laura Peters with Hill Mortgage has certainly changed her appearance a little bit.
Hey, Chris, I'm here now. We can start the meeting.
What happened, Laura? What happened?
Oh, there he is, Jack Berry.
So Jason
Sorry.
Kaleta with Hill Mortgage is going to give us a quick update on the mortgage industry from the broker standpoint and the volume and what they're experiencing and possibly some best practices.
Hey guys, hey, thanks, Chris. Yeah, so on our end, it looks, it seems like the wholesale, I think probably with all of us, the wholesalers are getting caught up. There was a couple of lenders we were using, I don't want to say exclusively, but weighed heavy on that were really behind. We're in August now, let's call it end of June through July, that are starting to get caught up, whether it's being ramping up or whatever the case is. But it is, I think just like with everything that's going on, we're just kind of learning or adjusting or adapting, whatever the words are, and getting back to, the times that we're used to, or the turn times that we're used to as before all this stuff. Some of the best practice stuff that we're doing, and I'm sure Chris is we're just try to send in the most complete files. I'm sure all you guys do the same thing, and try to get the file, to the closing table as quick as possible. Sometimes it's out of our hands to control the speed. But as far as, I think even the last 2 weeks, we're seeing a little bit more of back to, even the title companies back to, hey, I worked all weekend, we got caught up, now we're back to the turn times, and it's pretty much, it's still looking good. I hear from all the realtors out there, and you guys can chime in, that inventory is low, but prices are going up, and 6-7 offers on a place. So we know the clients are still out there, and we're just doing whatever we can. Guidelines are loosening up. I'm seeing a little bit more on jumbo. Seems like some of that stuff is hopefully making the way back on our end. Jumbo's been pretty non-existent since I don't know, end of March, something along those lines. But it looks like it's kind of making the way back a little bit on the wholesale side. We still have our self-employment guidelines, overlays, as far as profit and loss, those types of things. But it's still doable now. I think maybe even with us, we know what we're looking for. We're not getting hit, in March or April when they're just throwing in guidelines. Now we've adjusted to it as well. So if we get a self-employed borrower, we can say, hey, listen, these are the things that we're going to need. Or if you've got a job gap, why was your job gap? Our new forbearance guidelines, since the forbearance came in, we can kind of, prep everybody for that if there's a next step, getting the house paid up or whatever the case. So that's about it.
Good. All right. And I'll step in with from a correspondent or direct lender standpoint and say that, yeah, we're absolutely seeing volumes start to return to or turn time start to return to normal-ish. There are certainly some pockets. The more rural you get, the harder it is to find an appraiser. So we may run into a little bit longer of a time on those. Some of the government loans, with an RD or a MISHDA loan, those are going to have an extended period of time. Having had a conversation with MISHDA earlier this week as well, they have some of their people finally coming back to work. So their turn time, which had gotten as out of whack as 15 days, which in a normal purchase environment would be roughly half the process, is starting to return and slow and get back to a reasonable time. So, but as Jason mentioned, forbearance, that's something that we still need to make sure that we watch out for on government loans. So FHA, VA, USDA, week over week, the forbearance numbers actually increased. And have 3 straight weeks. So it's something that, even though it feels like we're going back to normal, we're in certain segments making sure that we still don't miss those things because we're seeing things still head in the other direction. And with the forbearance, for those who aren't aware, you're going to need to make sure those mortgages are caught up prior to even applying. So and by caught up, that means that you have either paid the payments that were skipped in full to the servicer, or you have now made 3 payments in your new payment arrangement. So if those 3 payments were skipped and moved to the back end of the mortgage, once that is agreed to, it is 3 payments out of that. So that could result in either a chunk of change coming out of their pocket or needing to make 3 full payments. And again, this is something that you want to make sure you get the clients pre-approved or especially reapproved as early in the process as possible so that you don't run into these issues. The Department of Education did a really excellent thing where they basically told everybody to just go ahead and stop making your payments, which was best of intentions. But from a mortgage standpoint, that took us from being able to use a payment, an income-based repayment that everybody was comfortable with and the client may actually be making and still able to make, to all of a sudden 1% of the balance. And if you have somebody who was an architect or such that might have $180,000+ in student loans that was on a $400 income-based repayment plan that then went into forbearance or deferral on their student loans because the Department of Education said you could, we're all of a sudden looking at about a $1,400 difference in payment that we have to qualify with. And that would equate to roughly, $150,000 to $200,000 of approvability for said client. And it's something that the clients may not be aware of because it's not actually an impact to them. So getting them in front of a professional as early as possible to make sure that their actual situation is evaluated fully is always key. And making sure that you're getting a proper pre-approval, not just a fly-by-night, hey, I told them some information, they gave me a letter pre-qualification. It is very important to make sure that you're getting full documentation and that as a listing agent, if you're accepting an offer, run through and make sure if you see any issues with the home potentially appraising, hey, is there a backup plan? Have those types of conversations as well. So,
Hey, Chris.
Yeah.
Hey, real quick, maybe just touch base on what the forbearance means if their client's looking to buy a house and their current house is in forbearance. What affects their pre-approval?
Yeah, they won't get one.
Would they have to catch
It's
up?
that simple.
They catch up.
Yep. So they will have to, same rules will apply. They will have to catch up. So if their current mortgage on a home that's, let's say it's listed for sale, if they need to bring that current either in a lump sum or make those 3 payments, and 3 payments can't be, I made one on Monday, one on Tuesday, one on Wednesday. It is 3 consecutive months of payments. Or they can satisfy it by selling their home. So you may take a client who was non-contingent, and now you have to write a contingent offer because they have to satisfy that mortgage and bring it current, and there's no other way other than selling it and satisfying. So keep that in mind as well. We've come across some crazy scenarios. We're adjusting to these. We're used to these guidelines now because we've seen them for the better part of a few months. But occasionally, just like anything in this industry, we're never going to say we see it all because that's when the crazy pops up. So at this point, we'll open it up to anyone on our panel with any questions or anything that you may have seen, or tips or tricks, anything that we can do to help you guys and or your clients. All right.
Let everybody talk at once. Everybody.
I wanted to, Bob Taylor, I wanted to mention that I had talked to a friend of mine who's over at United Wholesale, and he had said that they've gone back to work pretty much in their building, and they're also seeing a huge increase in their activity. And I don't know if that's because they went back into the building or if they're just opening up, but that would seem to dovetail with some of the comments that Jason made about the secondary market loosening up a little bit.
Yeah, United Wholesale has been super conservative, with their rates and their programs. So I think they're coming back in a little slower than everybody else. They can, they're the biggest, but yeah, I think they both go hand in hand.
Okay. Any unusual guidelines being discussed by Fannie or Freddie, by any of the GSEs regarding lending? There's all sorts of rumor, but anything factual?
I think what's going to be very interesting to see in Q4 this year is if there is actually any movement going into or post-election to privatize Fannie and Freddie again. I think that's going to be one of the next big changes for the industry as a whole. If Fannie and Freddie move back into being private companies and not having the United States Treasury just blanketly handing them money, I'm simplifying that grossly, but to have to recapitalize them, we are going to see a very big restriction on the guidelines. One thing that we have seen recently is them start to tweak the QM rules, or the qualified mortgage rules, with the ability to repay and being able to exceed 43% or not. That's something that a private company or a private Fannie Mae, Freddie Mac will now have to stay to that. And when we're talking about going from a 43% maximum debt to income ratio to a 50% debt to income ratio, yes, that's 7% of approvability. That's roughly the equivalent of 0.3% in interest rate. It's also the equivalent on most borrowers. If you had a $200,000 borrower, now you have a roughly $177,000 borrower on the max. So something to definitely keep our eye on as well.
Yeah, and NAR has been very vigilant on the GSE reform. I don't get the sense in talking to people that I know at a more senior level than me that there's enough knowledge on the part of the Senate and the House to come up with a package in a short enough term to redo it, and that the Democrats are somewhat opposed to privatizing the GSEs. So even regardless of what happens in the election, if they retain control of the House, not much will change. That's kind of one of the things that we're hanging our hat on. There's been some concern that if private lending gets into the mix more than they are, the 30-year mortgage could be in jeopardy.
Wow.
Because who wants to loan money and get paid back in 30 years?
Right.
Nobody.
Right. It's a new world.
And the United States is really the only country that has a 30-year fixed rate mortgage.
Right. And that
everywhere else has, even just right across the river from us,
yep.
They have to redo their mortgage every 5 years. So for those who may be not so local, that's Canada that I'm referencing.
Yeah, it's been a big concern. I happen to be working with something called the GSE Information Reform Group at NAR, and that's something that we've been discussing.
I could see the likelihood of that happening. Don't
well,
you?
If the people who controlled how mortgages were going to be done were the big box lenders, and I'm not going to name names, but were the big box lenders, what do you think they would want?
Their money.
Yeah. Somebody want, and obviously getting private money involved is important, but the securitization and backing of the federal government's the only thing that makes a 30-year fixed rate mortgage even tolerable to an investor when it's securitized. That's why the failure in 2008 with the failure of Lehman, actually that was 9, was so devastating, because those were organizations that had parked the money there because it was never gonna go bad.
Right.
And it was a rate of return that they could tolerate on their investment.
Good point.
And from a government standpoint, the conservatorship that Fannie Mae and Freddie Mac have been put in, because that's what it was. It was not a bailout. Let's be very clear about that.
They had to call it a conservatorship because you couldn't put them into bankruptcy.
Yep. So
right.
the amount of money that has been paid back is roughly about 19-fold. So what went out has come back in 19 times from Fannie Mae and Freddie Mac. It has been very, very lucrative for the United States government, but yet somehow we still don't have nationalized healthcare. I'm just don't put that out there. We'll just leave it there.
And Chris, what you've commented on is I've made the observation that if the backstop didn't work, which is what the federal guarantee is, if the backstop hadn't worked, the U.S. government would have never gotten paid back what it got paid back. But the fact of the matter is, it worked exactly the way it was supposed to work. The government bailed them out, the government kept them liquid, and now they've made 19 times on their investment. How many of you would like to have invested $100 in 2008 and gotten 19% back between then and now? Or 100, I take that back.
Not 19%, 19 times.
1900% back on what you invested. In other words, you invested $100 and now that 100 is 1900.
Those wise guys.
Yeah. So there's the argument to privatize the GSEs is somewhat limited, and is yeah, not a good one, especially for our industry.
Well,
Any other questions or out there for our panel? All right. Well, Kelly came off mute.
Oh, I just have a comment. What I'm seeing with everybody being busy, I've seen a lot of PAs and stuff coming through that are sloppy, I guess, for lack of a better word. So I think we just all need to be diligent, maybe just check and balances on each other. I don't know about other realtors here, but if you're seeing where people are still learning how to do the electronic things, you know, and they don't know what they're doing still and things aren't filled out and everybody's in a hurry. So I think we just need to be diligent to just double check everybody. You know, I know you guys are all busy too, and there's mistakes being made that we need to just be careful. We're watching each other, and I guess it's just my comment. That's all.
Okay.
I have a comment on that. So I get in conversations that, you know, an agent will call and say, gosh, I don't, if it's the seller, they obviously, if for buyer's policy, I need the buyer's names, right, to go into a home warranty. And very often, most likely, the seller's agent doesn't have that. They have their name, but obviously not their contact or whatever. So then I'll reach out to the buyer's agent to collect that. And I got to tell you, it's just a lot of agents complain to me, I guess, bend my ear. The guy, good luck trying to get a hold of that person. I can't, they don't ever get back with me. And, you know, it's just, there's a lot of sloppiness, I think, all over the place. And I don't get that. Maybe the leadership, I guess everybody's breaking off to their own thing, and that's okay, right? I get it, the teams and all that. And they're knowledgeable, but I think maybe it's just too much at one time for them to handle all those little details, or people are just naive and don't understand, you know, how important these details are. So I don't know what the deal is out there, but it's a little crazy. I agree with you, what you just said, Kelly. You're on mute.
Okay. Let's see. I think they kind of just trust each other. Like, yeah, you know, like one day, like inspections Jaymie was talking about, I had a PA come in and they were doing 3 to 5 days, and I knew that was not doable, or there was a chance, like, just put 7 or 10, it's okay. You know, I understand it's busy, but I think they just let it slide. And I was always taught, whatever's in writing in that contract, you kind of have to pay attention to, you know, you just can't, like, oh, it'll be okay. You know, you can't. So.
I'm sorry, I managed far too long. The important thing to understand with your real estate contract is that it has to be something that an independent party who was not involved in the transaction 5 years from now can understand. And that means that exactly what needs to be done is as clear as possible. And so don't ever, as a practitioner, feel that you're being difficult by insisting that something be clear, because the day will come when that lack of clarity will come back and bite you. And if it doesn't bite you by the time the deal closes, it could bite you 5 years after it closed, because now there's a question on the contract. So
Yes.
those are the kinds of things that contract law is very unforgiving. I don't have any other way to put it. It's the 4 corners of the paper have to be able to stand on their own. And the other thing that most people don't realize is that if there is an incongruity in the contract, it is generally attributed to the drafter. So it is whoever drafts the contract that is the one who is typically penalized in a court of law relative to how things are going to be done. So if the buyer's agent drafted it or the seller's agent drafted it, if it blows up, the court is likely going to lean far more on that side of the transaction to fix the problem than the other side of the transaction, even though it could easily be something that's their fault.
Not who accepted it.
Yeah. Yeah, so
accepted those terms.
yeah.
Oh my goodness.
Contract law is very unforgiving. I used to teach Con Ed with a guy by the name of Bill Schlechte, who was an attorney, a very well-known real estate attorney in the state of Michigan. Probably rivaled Greg McClellan to some extent, but he was a delight to listen to. Yeah, contract law is critical. If for any of you in your offices, if you don't discuss contract law on a regular basis, you're probably going to wish at some point that you had.
Fantastic. So, perfect. So, any other questions or out there for our panel? All right. Well, thank you everyone for joining us again for Red Wine and Regulations. Next month we'll be doing this again, and we'll keep this rolling so that we can continue to provide value and updates in the now digital world that we're in. So, again, thank you everyone for joining us. Jason Kaleta with Hill Mortgage, Kim Romero with First American Home Warranty, Jaymie Paternoster with House Call Home Inspectors, and I'm Chris DeRosier with John Adams Mortgage. Thank you, everyone.
Great.
Thank you.